Welcome to the Frictionless Innkeeper podcast. Coming right up, fresh tips and insights from lodging professionals aimed at helping you improve your business. Our podcast is brought to you by the Frictionless Guest App, the digital concierge that helps your guests to live like locals. Learn how at frictionlessguest.com.
Mr. Steve Short, how's it going?
Going well, Matt. How are you?
I'm doing well. Life is good. Yeah, as we were talking about, I'm back in the States for a little stretch here, visiting my parents and doing some other stuff. But that's the beauty of the internet. We can do a Frictionless Innkeeper podcast from anywhere.
You're such a good man, such a good son, a good father, all of those things.
We all try our best,
Right.
and here's a stretch of a segue. And innkeepers often try their best at all times. And sometimes that involves needing financing and options for expansion, renovation, building a barn, whatever it may be. And
Yeah.
this Frictionless Innkeeper podcast is with Michael Oppel, who is the Vice President and Loan Officer at Stone Bank. And specifically, we talked about government guaranteed loan programs.
He is the expert on that, that's for sure. So I started my career in banking. I was in banking for about 9 years. Not a lender, but working on the IT side of things mostly. But when it comes to lending, that's its own thing, but government lending is a very specific thing. There's only certain lenders that do SBA loans. He talks about USDA and SBA are the main ones that I think our audience is concerned about, interested in. Pretty deep dive into the whole options available and how it works. And so if anybody's out there thinking about, hey, I want to expand. My example that we used was the barn. I want to build a barn and start having, parties, whatever, weddings in that barn. How do I go about that? So if you've got any ideas that are just kind of floating out there, I think this is a great podcast to get a feel for what might be possible. Yeah.
Absolutely. And with that, we hope you enjoyed this Frictionless Innkeeper podcast interview with Michael Oppel, Vice President and Loan Officer with Stone Bank. And Michael, thank you so much for joining us today.
Yes, sir.
Yeah, it's great to have you. Steve Short, how are you, my friend?
I'm doing well, Matt. I'm glad to see that you're back in the continental U.S. here just for a brief moment for us, for our podcast.
That's right. I'm back stateside with you, my friend. So, Michael, thanks again for joining us. I know we were talking before the podcast how we've never really talked to anybody in banking or really covered financing for independent lodging and innkeepers. And before we really dive into the topic today, would love to hear more about your background, and then we can just take it from there.
Yeah, sure. Thanks, man. Grew up in a traditional banking kind of position coming out of college, working in credit, underwriting, all kinds of things. Some loan brokers came into our office, had a SBA loan. I underwrote it for the bank. We got it approved, and I really liked that transaction. So I started looking more into government guaranteed lending, which is what I've been doing for nearly 15 years now. And it's kind of blossomed into all kinds of SBA and USDA 1RD lending, from underwriting, packaging, servicing, post-closing, managing a portfolio, and lending and running different production offices at different institutions. So it's kind of come full circle. I'm a lender at Stone Bank right now. It's going great. They're one of the top USDA lenders in the country, one of the top USD or SBA lenders in the state of Arkansas. I believe a top 50 SBA lender in the country. So the bank is small and mighty, but we're doing some really big things. I'm just happy they put up with me and some of the crazy things I bring them.
That's cool. And so they're a full service bank, and you're just part of the whole wing that does the government guaranteed lending, basically?
Yes, sir. That's essentially it. We bring in loans just like any bank lender would do, except we're specialized in underwriting and packaging and closing SBA and USDA loans. So we don't need a third-party service to do that. We have all the expertise in-house. On the SBA side, they have a preferred lenders program, which allows us to approve loans on behalf of the SBA without going through that extra level of approval that the SBA requires for some banks. The USDA really doesn't have a program like that, but we're considered a national lender, meaning we've done enough of these loans in enough states that the USDA at the national level has somewhat recognized our skills, as it were.
Okay. Yeah, I was wondering where Stone Bank is based out of, even though, like you say, that anywhere within the U.S. works, right, as
Right.
a market for you, right? But where are they located?
Stone Bank is headquartered in Little Rock, Arkansas. I believe we have 8 branch locations around Arkansas. We're just under $1 billion in total assets. We're a privately held bank, FDIC insured, all of that fun stuff. I enjoy working at community banks. Stone Bank enjoys being a community bank. It's great having access to decision makers with, a text or a quick phone call versus some of the larger banks I've been with. You've got 5 or 6 decision makers, and it
Mm,
gets a little
right.
frustrating sometimes.
Yeah, no, I agree. As far as working with a smaller bank, I think that's a big plus. But you are always working remotely with what you do?
Yes, sir. I work and live in rural America. I live in South Georgia. I think I've been a remote employee for almost all 15 years. I worked in a branch coming out of college when I was in my consumer commercial underwriting credit role. Then when I moved into government guaranteed lending, since the United States is my territory, there's no reason for me to work in a branch. I'm always doing site visits somewhere in the country, seeing projects, talking to borrowers, going to meetings, presenting on these programs. Recently, I've focused more on USDA rural development lending. These are not the housing programs, but that's a different beast in and of itself. They're both really fun programs to get into, but each one has its own unique flavor, I guess.
Okay. So for our audience, which is, independent lodging folks, what kind of program is it? Mostly SBA that would apply to them? Give us the main scenarios, I guess, where your type of loan is something that, they could use, they could benefit from, and how that applies to the independent lodging sector.
Sure, sure. So, SBA has 2 programs, the 7A loan program and the 504 loan program, both fantastic loan programs. I would say probably 80% of independent lodging would fall into that. Maybe, that's not an exact number. That's just kind of a hip check or gut check on what that could be. Loans that are less than $5 million will usually qualify for 7A. They can be anywhere in the country. There's no location based eligibility or anything like that. You get up to larger transactions on the 504 side. Technically, anything up to $10 million can be structured under the SBA 504 loan side. It kind of starts making more sense to go that way when you get up closer to that 5 million plus range. And then you have the USDA loan, which is not a lot of people know about that. It's been a pretty hidden product for decades since it come out. There's a finite amount of funds that are available for those. So it is kind of a boxing match come July, to get loans
Mm,
funded because, funds run out, but those loans can go up to 25 million. We've seen some hospitality projects exceed that before. It's hard to get an independent B&B to be $25 million. You're almost getting to hotel or a conference center level there, but we've seen some pretty impressive B&Bs and inns that include some pretty nice wedding venues, food and beverage options where, a lot of the time these are the central areas for a very small community. The thing to know about USDA is it's a harder program to get qualified for. It takes time. You have to be in an eligible location. There's a map for it. I guess that's one of the better things. Historically, it was a Bing map. So, hope you're not sponsored by Microsoft. But they've since fixed that. It works pretty well now. It's a harder program unless you're looking above $5 or $6 million. That would be when the USDA loan would benefit any type of transaction, whether it's
okay.
new construction, acquisition, renovation, refinance, any of those.
So we don't have to get into it a whole lot because I'm like, why would the USDA care if most of it's SBA and based upon, and really you don't really think about it unless you don't think about using USDA unless it's over 5 million. If that's the case, because of the challenges getting qualified. So I guess maybe we should talk mostly about the SBA thing, the 7A 504. So is it like what qualifies you? And I know we have inspiring innkeepers that listen, but it's probably mostly existing innkeepers. So if I already have a B&B, but maybe I am thinking about expanding, my offering, like I want to build a barn for weddings or something like that. Is that where this mostly would apply, or can I do restoration, renovation work? What kinds of loans are typical? And then it would be interesting to get into the 7A versus the 504.
Yeah. So we kind of break these down into those four classifications. Are you a startup? Meaning you're most likely going to build something from the ground up. Attending the ALP conference, not a lot of people are doing that. Seems to be an acquisition, mostly industry, versus the hotel side of things is mostly new construction. A lot of other industries are new construction front. The independent lodging and B&B industry is very much acquire an existing and do some deferred maintenance renovations or expansion of the facilities. The SBA is great for that. It's great for acquisitions. It's great for renovating or expanding your property. And it's a lot easier to get qualified for the loan program when you're not a startup. The hardest thing to do is start a new business, especially when you have to build a large building. That's additional risk for the bank. Cost a lot of extra money to do that. So some of the easiest transactions we do are in the acquisition, refinance, and expansion renovation side of things.
Okay. So yeah, refinance, I didn't think about that. And again, I don't think we've talked to a banker yet. So I don't know. We've certainly talked to experts who can help with buying and selling, not just, we're talking, it's never just a real estate transaction, it's a business transaction, right? So why do I work with you as an SBA lender versus a commercial bank or whatever? What are the benefits? Do I get better rates? Do I just get more chance that I'm going to be eligible because it's government backed and the government wants to help you, that sort of thing? Or is maybe that's my only option? I would think not, but why
It's a
SBA?
little bit of all three of those, actually. I mean, I hate to, paint with a broad brush there, but every deal is a snowflake. They've all got something different with them, and they all generally will fall into one of those. Sometimes you have no other choice. You don't have any relevant experience. Maybe you're, a teacher that's retiring and wants to do this as a way to retire. I mean, you don't have any business experience. You've never run a lodge before, but there is relevant experience. You've likely dealt with a bunch of kids, which, is probably easier than dealing with a bunch of grown people. But,
I don't know.
you know, but
Yeah.
you have that customer service. You've dealt with people who can be unruly at sometimes and know how to calm situations down. So there's relatable experience, but not business experience. So you need a program to take off some of that risk, that expertise risk. We do a lot with when you have an existing business with existing debt and the bank doesn't want to give you anything else. The SBA can sometimes come in as a second position to allow you to do renovations or expansion when a primary lender won't do that.
Is that the collateral side? Is that what you're saying? That there's not enough collateral in the house, in the real estate to justify it, or because the debt's eaten up that collateral or whatever?
Yeah. Even when we're doing acquisitions where, the real estate may be worth, say, $1 million, but they want 1.5 million for the business operations and the real estate, the SBA can fund over 100% loan to value. That is a bank to bank choice, though. While the SBA allows for that, not every bank approves those types of transactions. Some banks keep it, you have to be at least a 1-to-1 loan to collateral. Some banks don't care. I've seen some banks out there that says we will do fully unsecured loans on the SBA. Other banks just won't. So that is a bank decision. Commercially, no bank will let you do an unsecured unless you have a incredible history with that bank.
Right,
Hundreds
right.
of thousands or millions of dollars on deposits, decades of successfully paid off loans, and not just car loans or a house loan, but mostly commercial things where they know they've got that history with you. And not a lot of people have that again. A lot of the people coming in this space are not career hoteliers or innkeepers. A lot of them are fairly new to the industry, are coming into this not with decades of experience. So they need that extra help to get there. And lastly, sometimes it's about equity. Some commercial banks are looking for 20, 25, 30. I've seen a few up to 40% equity on these transactions. And
Wow.
SBA is pretty thin. There's programs where you can get down to 10% on acquisitions or 20% on acquisitions. Refinance and expansion could be zero. Well, they could 100% finance you as long as you operated the business successfully. There's reasons to do this. Of course, there's reasons not to do this. Not everything is borrower friendly. Let's talk about interest rates. And when I did my talk at ALP this past year up in Cleveland, this is one of the things I covered is, your debt terms are not always just your interest rates. Everybody looks at interest rate. That's what you compare with your friends, what are your interest rates, but you don't compare what are the other terms of the loan. And there are some really, really terrible loan covenants and other loan terms in other debts that just because you have a low interest rate make them worse than paying a higher interest rate with more borrower-friendly terms.
Okay. So the terms tend to be more borrower friendly with SBI?
The interest rate is not. The rest of the terms generally are pretty friendly
Yeah. Okay.
versus a lot of commercial projects.
If I already have, like my example, I want to build a barn and on my property. And so in that case, and let's say I have no equity in the property. I just bought it last year but it's running and maybe it was a viable B&B in for the last 10 years or whatever. So I was able to get financing for that, but now I want to expand. Been there for a year. I've kind of learned learned the business, learned the market, that sort of thing. Feel like this is worthwhile. So I can get like basically no money into the deal, like a no equity type of loan conceivably to build my barn, even though I don't have equity in the property as well. Is that right?
It will depend on the booked success of your business. You're
Okay.
going to have some kind of equity, I would imagine, to take that project down at some point. Some bank somewhere would require you to put some kind of equity in to buy the property, but at some point in your business history with that property. So you'll have some kind of booked equity in maybe 95% of cases. There's a few edge cases there where you can get away with 100% financing. You're probably going to get stuck
Yeah.
with that. That's usually hard money stuff, and that's pretty tough. But
Right.
in most cases, you'll have some equity. You'll have, your operations of the last year, hopefully your cash flow positive because you're going to need to be able to show that your business can support its current debt before anybody's going to let you expand or refinance their debt. So you've got to have a successful, business before you can
Well,
start
that's what I'm
moving on.
saying though. But let's assume I use the example of 1 year. I've had it for 1 year.
Yeah.
Maybe it's 5 years. The point
Yeah.
is I'm established, right? So this thing's maybe was running before me. I purchased it 5 years ago, X number of years, and things are profitable at least. I can show that on paper. But maybe I need to put in a whole new kitchen, which is going to be expensive. But you're saying with a reasonable, maybe there's going to be some money down, but the most important thing is that I show that I've been paying on the debt for 5 years and that I'm making some money on the business because they want to make sure you can service the new debt, right? But I guess you also, so if it's a barn, for example, I'm probably going to have some sort of business plan in terms of, all right, here's my projections. Like now that I've been in this town for 5 years, I have an understanding of what venues are out there. and that they're underserved, and therefore there's going to be X number of, I expect to do 10 events the first year and 20 the next year, whatever. So they're going to probably ask for those kinds of things so I can stand behind the plan. Although I would think if I tell them I know Matt, that would be enough to get the loan. But they'll be like, Matt, really? The guy, like, who
I'm the
does the
guy.
Frictionless Innkeeper podcast?
Yes,
Like,
exactly.
yeah. But anyway, no, what do I have to do to get the loan? Right? Is the
Yeah, I
bottom
mean,
line.
you're spot on. You're spot on. When you're going into a new revenue vertical, like wanting to buy a barn to do wedding, or even if you want to buy a barn to put people in, as a glamping retreat or a cabin or something like that, that's still a little bit different. We'd want to see some kind of a business plan, mainly for the wedding side of things. That's pretty different than renting out a room for the night. So we'd want to see some kind of business plan. We love when borrowers will go to their local SBDC or SCORE offices and have them help them with their business plans. That's what they're there for. It's a free program. They're really good, and we have a lot of success with those. They filter businesses out for us first and help kind of, as an underwriter, they ask all the questions that I would ask on my first pass. I'm not so much the guy that gets hated on. It's the SBDC first, then I come and ask my follow-up questions. So it's a lot better for me. I've got that first pass through. But you're exactly right. We're going to need projections. We want to know, how many weddings do you plan to do? If you say you can do, 120 weddings a year, maybe I'll question that a little bit. That's a lot of weddings to do in a year.
Yeah. That is
Unless,
a lot.
I mean, I've had some like, oh, we can do 200 weddings in a year. I'm like, I don't think when most people want to get married. It's usually Friday night or Saturday night, and you're booking up some rooms for before and after and all that. So it really kills your weekends to do a wedding. So,
Yeah.
having that information understood, what's the draw to the area? What is your draw going to be to pull in these guests? Maybe it's a supply and demand. Maybe there's just too much demand in your area, and this can fill that supply demand gap. You should know what the prices of these events are going to be, and what catering should cost, what the room packages should look like. That's all information that the SBDC and SCORE can help you put into that business plan that helps relate your business vision back to the lender. They're kind of that intermediary that translates from business to lender.
So what is the SBDC? What does that stand
That's
for?
the Small Business Development Center.
Okay.
We have one in Georgia. It's run by the University System of Georgia, or UGA. Specifically, I believe every state has a college or university that kind of sponsors it for the whole state. The people in the state of Georgia, I'll make sure they listen to this podcast so I get some gold stars there, but they're fantastic. I truly mean that. We send them a bunch of business and they write some great reports. They have turned a lot of businesses that were edge cases into real successes because they're able to bring in all the thoughts the business owner may have, but again, not have that experience in writing an actual business plan. It sounds scary to do, but it's not that hard once you know the formula for it and can break it down.
Okay. Yeah. So this is good. So now I'm curious, like process wise. So I say, okay, I've got this idea. I want to build a barn and do weddings. Again, it's just easiest to kind of stick with that example. So am I coming to Stone Bank to you first and saying, hey, I need a loan? Working thing, you say, okay, great. Get me your information of what you're trying to do, how much you want us to lend you, et cetera. And so I don't deal directly with the SBA. You always go to the lender first, but then SBDC can help out. So they're part of the Small Business Administration, and they're there to help small businesses get their loan. Is that what they're there for?
Yeah. So you will come to the bank and we'll talk through the lender. You will call me and say, I want to add this barn. Here's my information. You'll send me some financial statements, tax returns, resumes, just information about the property and about what you want to do. And I'll come back and tell you, if you don't have a complete business plan, why don't you call the SBDC? Here's a contact in your area that represents your area that you can get a hold of, and they will help you build out your business plan, all of your projected financials, all of your nail down all of your numbers and write that in a format that first the SBA will like and second the bank will like. Further, if you're going to build something, you've got to have costs. What is that barn cost to build? Are you going to stick build it? Is a GC up there going to build it? Are you building a metal building with a facade? Who's that coming from? Is there any equipment that you need if you're going to renovate a kitchen as well, like you mentioned before? Send me some information on that equipment and the cost. Maybe have a GC do that. Most banks, when you get into renovations, they do not want the borrower doing their own renovations. You're not licensed to do that. You're not bonded for that. We're going to disperse the loan based on draws, and you're not going to be able to submit the draws in the appropriate way to satisfy that. So it's best to have a GC.
Yeah, you got to, I would think.
Yeah.
Yeah. And just last question on SBDC. So that's a free service. They're a government part of the SBA, and they'll, assuming they have the bandwidth, they will help you work through all that then.
Yeah, that's correct. They are a free service. They get their funding based on their throughput, based on how many projects that they are able to take on and how much equity is being raised from the work that they've done, how much debt is being raised on the work that they've done. So as a lender, when I get brought into that conversation, they do ask, was this loan funded? How much was it? Because they report that back to the state or the national office or whatever, and that's how they get their gold stars and their funding for the next year. The more people that use them, the more funding they get, and it can be open for more individuals. A lot of people don't know about it. It truly is a great resource. I wish I found them out earlier in my career. I would have used them so much more.
Yeah, sounds like it. Yeah, it's cool. What can I expect for rates right now with my barn?
Well, barns are risky things. No, the standard SBA rates can range from, maybe 1.75 over prime to 2.75 over prime. So currently, as of this recording, prime is at 6.75%. Whatever the prime rate is when your loan closes is where that will sit. SBA loans mostly adjust quarterly. There's a few banks out there that will fix them for the full life of the loan. I've never been at a bank that does those. I don't know what those would look like or who those banks are, but I've heard about some of them that do that. Anybody who understands risk, time value of money, all of that fun financial theory knows that if you're going to fix a loan for that long, it's probably going to be at a premium today. So I would hate to figure out what those things would be priced at, but most SBA loans, 99% of SBA loans are priced in that range. They adjust quarterly. They're set. If it's as long as it's real estate secured, they're set on a 25-year amortization.
Oh, wow. Okay.
You kind of go on with it. It's non-maturing. It's fully amortized. And I don't mean fully fixed. A lot of people mistake that when I say fully amortized. They think it's fixed for 25 years. No, the rate will vary every calendar quarter, but there's no maturity. So every 3 to 5 years, your conventional bank will balloon. You may have to get a new appraisal or new underwriting, and the loan has to be renewed. You have to pay your fees for that. You do that every 3 to 5 years. For your community bank, you don't have to do this. Kind of set
so
it
it's a 25. It's a 25-year term, is what you're saying.
Correct.
Is that right? Wow. Okay. Now to some of the fun part. You want to talk about some mistakes that borrowers make. So we always love hearing stories, these horror stories of, maybe the name should be changed to protect the innocent or whatever. But if you've got some stories, if not, maybe you just have some general comments on what to avoid. I don't know. I want to hear some good stories.
Oh, well, man, maybe we can't get too much in the weeds. Don't want to get fired or anything. So, but one of the biggest things is it's just not knowing your numbers. That's a pretty big red flag for a lot of lenders when they ask you for financial statements and you say, well, I don't have them or I don't do them. That's probably going to be a pretty big deal killer for any transaction, especially when you're acquiring a business. If the seller does not want to provide the financial statements, there's just no way that deal is going to work.
No.
Yeah, this is commercial. And I run into that a lot. In fact,
really?
I ran into it not in the Innkeeper and independent space. This was on a manufacturing company. They said, we just don't want to give those up. And I don't want to say a lot of it is fraud, but when you're dealing with cash-based businesses, some people just don't report their cash. It happens. You
Yeah.
see it a lot. I mean, it is fraud. Let's be honest. It is. Uh,
Right.
and you see it a lot. The old adage is if you don't pay taxes, you don't get debt. That's loosely accurate and do a lot of depreciation things to not pay taxes in the short term, but it's a fairly good adage. If you're not reporting all of your income, if you're not fairly expensing things, like if you're just running all of your personal expenses through your business, while you can legally do some of that to an extent, just trying to expense everything to not pay taxes, we still have to use tax returns as a basis for underwriting. One leads to the other. Not being prepared on the business plan side of things. And this is kind of go into some of the AI things I wanted to talk about. We have a ton of people submitting AI generated business plans, and I use pretty much all of the AI tools all the time. I'm always looking for some kind of industry knowledge that I may not have. The issue is a lot of these programs are cut off, May of 2025 is, I think, ChatGPT or Claude. There's some cutoff dates, and these programs change. They
Mhm.
also output text in a certain way that is really noticeable when you get one. Anybody can put a prompt, write me a business plan to acquire this specific inn. Here is the offering memo from the listing agent. They write up this 6-page business plan with its gray lines in between from ChatGPT, and they send it to me.
I know exactly what line you talked about. It's a
Yeah,
demarcation
Yeah.
line between the sections.
yeah.
Yeah. Yeah,
I
there's
mean,
lots of M dashes and short staccato sentences in there too,
yeah,
right?
I can't stand it. Usually I respond to a borrower saying, listen, if you don't want to put any time into actually writing a business plan, I'm okay with you saying, hey, ChatGPT or Claude or Grok, whatever you're using, generate me a template for a business plan and using that template and writing your own information, maybe
Right. As
plugging
a
some of
starting
that in
point.
there.
Yeah.
Yeah, I mean,
Framework. I mean,
right,
yeah. But if
right.
you're
But
not even putting your thoughts to it, then
yeah.
that's not a good sign from the beginning. Like,
And
yeah.
weekly, I get, and it's not, it used to be, one every month or so. And now I'm getting them multiple times. I got 3 this week alone. And,
Wow.
I send people back to the SBDC if they have one in their area or state, or SCORE is another one. That's the easiest way to let a lender down, to know that you're probably not serious about this. Is just kind of halfway do a business plan. Or if you need projections, most lenders will want to see some kind of projections, even if the historicals look great. They want to know what your thoughts are on what you're going to do with the business. They just don't do them. And a lot of it is because they don't know enough about the business to actually do them. They don't know.
Yeah.
And that goes back to that experience side of thing. And again, moving over to
Yeah.
BDC, they can help with that. They can help bridge that experience gap there. AI I love using it. It's great to be used by the borrower and by the bank. Another thing is when people start challenging me on my own loan programs. I had one yesterday that said, it was talking to me about USDA lending, and they said, well, I heard the USDA loans aren't broke up into 3 tranches. I was like, nope, that hasn't been accurate since 2020. They rolled out new regulations, but I said, did you ask AI about it? Because that's probably what it
Mhm.
said. In fact, I had a borrower, I guess about a month ago, said, "Oh, well, we didn't want to go with you with our first loan because AI said that Stone Bank doesn't do hospitality." I've got 100 and something million in my pipeline of all hospitality projects. What are you talking about? So,
Yeah.
AI can lead you astray. You should probably ask a lender, whether it's me or anybody else at Stone Bank, anybody really anywhere, before you start assuming what you can and can't do with these programs. We've had, I think, 3 SOP changes with the SBA in the last 6 or 9 months. It's been crazy there. We've had 3 or 4 rule changes with USDA, and these have been historically programs that only change once every year or once every 3 years. They're slow moving. Now they're changing rapidly. AI is not keeping up with that. There's some issues with using AI in these programs because they're changing too fast. We get really hard into marketing plans and management in these programs, and having AI write those things, it's funny to read, especially one that you've actually worked on, not knowing how Facebook works or Google business profiles work or Yelp or whatever you're going to market on, it's usually using old data and old techniques. So it's kind of funny to read some of those because you can tell when it's been overly prompted and you're just copying and pasting some of the information out. So,
Yeah.
and then the last thing is not knowing what is a good investment or getting too hung up on I can fix her kind of thing or I
Mhm.
can fix him kind of thing. We see a lot of beautiful properties, but they may have been closed down for a decade and there's so much deferred maintenance on the place. No one's stayed there in 10 years. They don't know why it shut down, or you may know why it shut down because it was just a bad place. Those are really hard to get done. Most banks are going to treat those, I think every bank would treat those as a startup. So
Mhm.
you're going to put more capital in. The business plan is going to be highly scrutinized. Your experience in the field is going to be high. They're not going to look for indirect, can you kind of get their experience? They're going to want somebody who has some kind of relevant business and hospitality experience in there. So, you know, I guess the last thing is probably a experience mismatch for what you're wanting to do. People with borrowers with no business experience wanting to buy a $5 or $6 million property that's operating at a very high level, that's probably a little bit much to go into for a first transaction for that. But it's hard to tell people, let's buy a smaller property first and make sure that you know what you're getting into. It's always harder
Right.
than it looks.
That's for sure. That's the one message you hear, at ALP or
Yep.
wherever. It's like the aspiring innkeeper. It's like you better make sure you know what you're getting into because that life is very hectic and very busy, and time is always a challenge. And you have to stay focused and know that you want to do it. You don't want to get into it just because it's a beautiful property and it looks you stayed there or you've stayed at bed and breakfast and oh, this is great, well, that's great as a guest, but behind the scenes it's not that easy at
I
all.
would say a prime example of what to do is a conversation I had yesterday with a borrower in my home state that I met at ALP. And they said they would get back to me when they have found a property. They've been looking all over the Southeast for months, years, I think, at this point. And they finally called me. We had a fantastic conversation. They told me that they've been to many ALP meetings, been through Innkeepers courses, have already communicated with the SBDC and they're writing their business plans.
That's
They
what you want to
have
hear, right?
I mean, that's one. I think one every 5 or 10 years maybe is what I get out of that. They've stayed at other properties, but they said they worked the property while they were staying there,
Oh, right. Okay. Yeah.
you know, just to try to help and get experience, at different properties. And these are, months at a time over the summer.
Yeah.
But they come from a background of where they're not business people now. They're soon to be retiring. This is going to be their retirement plan. And they needed to know first what they wanted to afford, how many rooms, how many
Yeah.
amenities they wanted to get into or revenue. Do they want some kind of full F&B package or spa package or weddings or
Right.
you
Yeah.
realize they didn't want a lot of that. They just wanted a
Yeah.
normal small B&B that, was historically successful, didn't have a lot of deferred maintenance and they could run fairly easily. And they have found a fantastic candidate. They had a business plan that had very little, it seemed like AI in it. The first one I got, the SBDC hasn't finished theirs, but it was well written. They submitted me a full package. Now I will send as a banker, we have an application package with a checklist of everything you need to submit. And they already had that stuff together, again, from going through the SBDC. They know what is needed from most banks. So they were able to fill all that documentation out, get it back to
Yeah.
me. It was in order. It wasn't, Carl's 2025 personal tax return X3749.pdf. It was clearly labeled information, which is not a requirement, but that's a huge quality of life improvement for your lender because they're going to have to do that. You have
Yeah.
clearly labeled documents, especially with some of these random documents we get sometimes you never know what they are until you open them. That's helpful when it comes to processing your loan and compressing the timeline it takes to get the loans. I think the biggest mistake is not properly estimating the time from first call to close. These are not programs that you get a loan in 10 days like a personal residence. These can take 60, 90, 120 days sometimes. And this is on the
Oh, I'm
SBA
sure.
side. You know,
Yeah.
we're dealing with commercial property, not residential property. This is a completely different animal. And even on the USDA side, if you get into the larger transaction, look for 6 to 9 months to get through there. That's why you need to be larger to get into that, to book that time delta that's required on that.
Yeah. Yep. Absolutely. Good deal. All right. So, Matt, you haven't been doing
Yes.
much of the talking like usual. Make yourself useful. Get us
I
out
will
of this
make
thing,
myself
I guess,
useful.
if we're
Yes.
ready. It sounds like we are. Let's make sure we get Michael's. Thanks, Michael. If folks want to contact you, this will be in the show notes, but what's a good way for them to get a hold of you?
Best way is email me, moppel@stonebank.com. That's the direct email. You can always look me up on LinkedIn too. I'm always there, happy to have a conversation and connect with business owners everywhere. I'm happy to discuss whatever projects you have. It doesn't have to be fully bank ready. I'm happy to help and guide through the process. This is a new program. Not a lot of people have done commercial lending, so I'm happy to guide through the process as long as you're willing to pull your weight too. So happy to answer any questions you have, look at any projects you have and let you know what is eligible, what's not, and what I think credit would have a problem with before we go through the whole process.
Cool. Good deal. All right, Matt.
All right, I'll take us out. So this concludes this Frictionless Innkeeper podcast interview with Michael Oppel, who is the Vice President and Loan Officer at Stone Bank, and he was kind enough to share his insights about government-guaranteed loan options for independent lodging and innkeepers. And our podcast is brought to you by the Frictionless Guest App, the digital concierge that helps your guests to live like locals. Learn how at frictionlessguest.com. Once again, that's frictionlessguest.com. And Michael and Steve, thank you both so much for your time.
Yes, sir.
Thanks, Michael. Appreciate your time.